Oh, that's awesome. Yeah. Great, guys.
Cool.
So
man,
if you want to wait for a few,
give yourself a little small introduction because there's some new people in here for the new year, and they've never heard about you or seen what you do, and just kind of let them know a little bit.
Oh yeah, all right. Yeah, so my name is Rafael. I'm a trader. I'm a futures trader since I'll say February last year, January last year. So it's been a little bit more than a year. Sorry. I was studying the ICT concepts for a while, but since April last year, I started developing my own system, my own trade system, and my own like let's say PDRAs and things. So nowadays the only thing that I use from ICT is fair value gaps, and I develop a system based on mathematical levels because in math 1 + 1 it has to be 2. So we try to get precision and not much gray zones using this model, and that's it. If you want to wait for few minutes more, if more people join, then we can start.
Yeah, I pinged everybody. It looks like whoever's here is ready to hear it. We're ready to start whenever.
All right.
And, yeah.
So
Pretty cool.
yeah, initially let me start with something that people that used to comment, because I did a few live streams here before, and on my first live stream I showed to people how to measure every swing high or low. For example, we have a rule. I have a rule that I call, if you have a doji candle on the swing low, what is a doji candle? It's a candle like this one, like the 1040 candle. Is a small candle with a symmetrical wick on the above and on the downside, almost a symmetrical wick. If you have a candle like this on the swing low, you measure the full candle and you looking for the deviation levels. If we close above -1, confirm they're moving to, in this case, to the upside. If price trade around half and 1 deviation, that will be the manipulation level. So most likely trade to this level and keep trading to the other side. In this case, it would be the downside. Close above 1, we have a confirmation to move to 2.33 and 2.5. If close above 2.5, a confirmation to 14.5 deviation. That would be the full delivery. And if the swing low, there's a different type of candle. Like for example, this one. This is a kind of a rejection block, not a doji candle. We measure the candle that makes the low to the next opposite color candle. In this case, it would be this one high, and we have the same rule for this price section. But what people ask me, and that they have like some kind of difficult, is okay, it's easy to see what was the swing high or the swing low after the price print all the candles. So like for example, here we can see clear that was the swing low, and according to the rule that I just said, that's not a doji candle. So I measure low, next opposite color candle high. We have the closing above -1 here. When close above -1, usually 1.5 and 2 will be a retracement level. We can pay attention to retracement levels. We should retrace at least to 50% of the range. This case was 618, and here close above 2.5 here. Minimum delivery for this this trade should be 14.5, and that happened here, right? But it's easy to do this after all candles are printed. So on the live price, we should see something like this. And people ask me, how can I know if this will be the correct swing high or next swing low? So something that we always need to pay attention before measure every swing high or every swing low. There are two ways to do. I like to say that we have like 5 chances to take a trade during the all day. 5 chances. So usually the first one will be Asia. I don't trade Asia, but if people live in Asia or they just have this free time to take, on Asia usually we're gonna see a chance around 8 p.m. So I put like the regular time. From 8 p.m. to 8:30 should be your chance to take a trading Asia, right? So if you want to trade Asia, you pay attention to this level. Sometimes we're gonna have like start of the move around 7 p.m., but most of the days will be this one. So your second chance will be in London. And in London, we need to wait at least 30 to 45 minutes after the London opening. So right now, we're talking about 3:30 a.m. or 3:45 a.m., right? That's your second chance. Your third chance will be the New York AM session. And usually, we're gonna have this first chance around 10 to 15 minutes after the opening will be your manipulation. So around 9:40 to 10 a.m. will be your third chance. Your first chance would be usually on the New York reversal. That's around 10:30 to 10:50. And your last chance would be New York PM session around 2 p.m. and 2:30 p.m. So outside these time windows, me personally, I don't looking for any trades because that's the 5 times during the day the price is most likely to make a nice move. All the other times you should have a small move or slow or a consolidation. So let's take a look for what happened like yesterday, from yesterday to today. Our first chance should be 8 to 8:30, right? So what happened here? 8 to 8:30. 8 to 8:30 we were in a small consolidation. At 8:26 we started moving to the downside. 8:43 was the Asia swing low and the low of the day before the New York session. So that was on one of our chance. So the second chance would be around 3:30 to 3:45 a.m. in London. So 3:30 to 3:45, that would be a swing low in London. We maybe could catch this move. Or after 4 a.m. we have this move to the downside. But before talking about the New York session, what these 2 time windows tell me? All right, if my first chance is around 8 to 8:30 p.m., I can see if I was taking London because I don't trade Asia because this is low. Sometimes it's the first part of the day. We need to see what price is most likely to do. But if I was taking trade in London, I could see that was the swing low of the day. So I come here and I measure this swing low, right? So doji candle, not a doji candle low to the next opposite color candle high. That will be my standard deviation. So we have this delivery here by 12:30 a.m. So that will be my minimum delivery, right? But if I start looking to trade London, I can see the price keep moving away for the 1 minute delivery, the 40 and 9 deviation delivery. So I drop to 3 minute time frame and I do the same. So low to next opposite color candle high. And I have this deviation in mind. Knowing this, I was start looking for a trade around 3:30 to 3:45 in London. So that could be this moving here, because what I just said is if we close above 1, confirm a move to at least 2.33 and 2.5 deviation. That will be up here. But I explained that around 1.5 and 2, we should make a retrace around 0 and -1. And sometimes it will be 0 and positive 1, right? But let's hold to this level. So if I'm looking to trade around 3:30, I need to see the deviation from the swing low. If the price didn't feel the 14.5 deviation yet, while price didn't get to 14.5 deviation or take the previous low, I don't measure any swing high or low here, because these are the deviation that are in charge of the price. So knowing this, we could try to see a trade here, or we will need to wait a retracement around 0 and -1. That will be here, and start looking for trade on this level. At the same time, we need to pay attention from low to the high, measure the Fibonacci retracement, and the retracement should be one of these three levels, from 618 to 0786, and we can see here that price touch 2 times the 0705, never trade below. That, like I said, sometimes this retracement should be between 0 and +1, right? Is inside this zone, and we start looking for the price. So if we didn't take the trade here, because knowing about these levels, if you're looking for 330 to take a trade, that should be something around 1.5, because I just said a few minutes ago, 1.5 should be a retracement zone back into this level. So we could pay attention to take this trade or this one. So to have in mind, okay, if I take this one, was the London swing. Let me get back to 1 minute. That was the first London swing after the manipulation. I would pay attention to this swing low. I'll pay attention to this one, or this, actually, because that's not a doji candle. Low next opposite color candle high. We never close above 2. 2 deviation is a reversal, and maybe we could take a trade looking for this low next opposite color candle, like is this one, yeah, somewhere around this, or this trade, or this one. But looking for the levels before the news today, and I took a trade to the news, just 2 micros. And why I was so confident to take a trade around here and the price would take this low, because I have this deviation, and I know the price will make it the retracement here. So at this point, I guess I took the trade around this level. I put one on the previous high and another micro on the 4 deviation, and the news just finished this delivery 44.5 deviation of the Asia swing high. If you pay attention, weak trade above 4.5 deviation. This is correct, but the body never close above. So here we have another swing high. Initially I measured just the doji candle. That could be the short after the news. This move, that was a nice move, because I know that this move here on the upside was done, because it hit 4.5 deviation. And if we don't want to risk to what happened on the news, because this is quite of risk if you don't know what you're doing, you could get to this reversal, and this is still a nice 108 points trade. But now comes the nice part to this level. So initially we could pay attention like this, right? And that comes the New York opening, 9:30. So from 9:30, the first swing low after the opening was this candle here, doji candle. I measured this candle, 2.5 deviation, never close above. There's also a reversal. And also I know that price failed to take the news high. We never took the news high. So technically this is not a perfect doji candle, right? Because the wicks is not symmetrical. So we measure high to the next opposite color candle low. That's it. And since the New York opening failed to take the high, the deviation that are in play, so here I have two things. Or I could measure this when it failed to close above 2.5. I can measure this candle here, right? The candle that makes the swing high. But since this candle, this high was never taken, high, next opposite color candle low, and I pay attention to the same things. I want to see close above one deviation we got here. So closing above this level, we pay attention to 2.33 and 2.5. If you're closing above this level, we should trade to 4 and 4.5 on the down here. That was the low of the New York session. So again, after this delivery was done, we can pay attention to measure a new swing high and low. So back into the 5 chances, Asia, price moving in this specific time. London, in specific time. New York AM, so from 9:40 to 10 a.m. This manipulation, when price started moving lower, happened 9:42. So inside the window, 9:40 to 10. So this could be a chance that we have on the downside. The first chance from 10:30 to 10:50 New York reversal. This low was 10:49, and here's the same. You could measure this one, and then wait for the price, see what happened. And here again, after we close above one deviation, confirms are moving to the upside. From 1.5 and 2, we should like to see a retrace. We pay attention to this. Retracing to 618. Close above 2.5. Minimum move delivery 4 and 4 and 4.5. And also, if I extend this one, we never close above this level here. Any questions so far?
So I think there's some questions about, obviously, like it takes a great deal of experience to be able to do this. And
I mean, I would say that's not easy. And then I would say if you try to do this 2 times, you're gonna do. I mean, you just master this thing. No, it takes time. But after you understand how these things work, you can like predict any price lag and any swing that can happen in any session. So basically what's important here, and something that I wanna I try to tell for the students, we always pay attention and measure a swing that happened in Asia or London. So today, for example, was the Asia swing low, and this deviation should tell what is going to like to happen usually on New York AM session, or at least the beginning of the New York AM session. Sometimes this low is made in London, like for example, I guess yesterday, I didn't trade yesterday because it was Monday, but let me see, because this happened every day. So the low here happening in London, remember that the time window 10:30, 10:45, so this is 10:40, this is 10:43 inside our window. So we do here the same low, next opposite color candle high. That's the 1 minute time frame. So initially we use the 1 minute. If the price keeps moving higher after the 4.5, we switch to 3, and we do the same. We switch to 3 deviation, but on 3 we have the same level, almost the same level as the 1. And then if keep moving higher, we switch to the 15, and on the 15 we do the same low, next opposite color candle high. And then let me see what happened to New York yesterday. There you go. 44.5 deviation is your delivery for the AM session that happened. Actually, this happened on the PM session, but on the AM session that was here, yeah, we touched 4 deviation. So you always pay attention to swing high that happened in Asia or London, and this can be a low or a high. You measure initially 1 minute time frame. If the price keep moving higher after the 4.5, we switch to 3. If keep moving away, we see 215, and that should be the high and low of the day. So try to make it this easier. That's not easy, but to try to make it easier, we pay attention to specific time windows. That's your 5 chance of trading the day, and after this specific time windows, we look into the left and looking for the swing high and low and measure, and we just can take a trade if the price, or especially you start looking for price in the other direction, if the price reach 14.5 deviation, or of the swing high or of the swing low.
So there's some questions about the specific times that you're using for the swings. And I do think that that's like a really helpful filter for a lot of people, because first of all, you're only having a specific window of when you're actually looking, and then second of all, it kind of just removes the noise from specific, like, let's call it like non-important swing highs and lows, because all these are very time based. And I think time has a question about why those specific times, and at least for my opinion and my answer is that those are just the main critical times where you're going to see a noticeable swing in the market.
Yeah.
And like when those pivots are created, you can see day in, day out, those are the times that you really want to be looking. Then that's kind of the answer for that. But unless you have a specific answer, then please let me know.
Yes, and also, for example, now is our last chance to the day from 2 and 2:30 p.m. So it looks like to be a swing. We not sure, but we can like pay attention to the price and do the same logic. So doji candle, full delivery. Okay, it's a small range, but even though that works. So we always need to pay attention. Doing this for me makes like a little bit simple, because you put a filter to specific times to look. And I just answered the question of the S Sonic, and yeah, my swing point, I just measured just the one single candle, not the leg. Like I said before, if the low has the doji candle like this one, I measure the single candle. If there's a different type of candle, I will measure the low to the next opposite color candle high. In this case, should be something like this. It's not the case, but something like this. I don't measure, for example, from the low to the previous leg, or here, for example, I wait for some leg for the swing, so for something like this. No, I always measure just one, sometimes 2 or 3 candles, depends of this rule. Yes. So imagine, for example, hypothetically that this candle wasn't a doji candle, was like, for example, a rejection block or any different type of candle. I'll measure from the low until the next opposite color candle, in this case high, because we are looking for the swing low. What's the next candle of the opposite color? This candle here. So I will measure from here to here. Sorry, this one here. That will be the measure. So for example, let me see. Imagine, for example, like this one. That was a swing, not a doji candle. So I measure from the high to the next opposite color candle low. But the next candle, opposite color candle, has a higher low, right? So I need to go to the next opposite color candle. In this case, it should be this one here. That's not the case, because not the correct swing high. We have another one here that was higher than this one, but this one should be like this one. Yeah, take off this one. Yeah, that will be this one. So high, next opposite color candle low, and we pay attention, and the delivery should be at least 50% of 3.5 and 4. So this could be a low because of two things: full delivery and inside our time window, 2 and 2:30. So this should be a nice low to pay attention, and that probably the movie for the end of the day from 2:30 to 4 p.m. should be a moving towards you upside here and looking for this deviation. Any other questions?
I was just gonna say, if anyone has any other questions, definitely time to ask us now. Don't hold back, because your question might be able to make something else more clear for other people that are with us. So please ask away.
Yeah, someone is typing. Let me see. I mean, it's not like yeah, about this Q zone. It's like that I'm restricted about this. I mean, from experience, I know that usually price is gonna make a nice move on these time windows, on these Q zones. Of course, sometimes price is gonna do a nice moving outside those times. Yes, but most of the days will be inside this window. So like say, for today, I just show you like all these times price is doing nice moves. So from the London, from 940 for the New York reversal, and now this window just time starts. So 230 is right now, and we started making should like to be a nice moving to the upside. Looks like we start moving to the upside, but it's not like okay. With time, I mean, I used to be in front of the charts. I don't know 6, 8, 10 hours in a day. And I noticed that that's just a waste of time. If you know specific times of the day, the price will do the nice move. If you can be 2 hours in front of the chart for the whole day and make a nice session. I personally just trade the New York AM session because for me is where things is gonna happen for real. So like I said today, from 940 to 10, we could catch a move of around 240 points to the downside, and if you lost this move, our reversal, this time into lunchtime, that will be another move of the 220. So these two moves, we're talking about 450 points. Tell me any other time in the day that you can catch 400 points in about 2 hours. You can. That's not gonna happen. Sometimes okay on the new. Yeah, we got a nice move here, but that's gambling. If you don't know exactly what's going on here, you can maybe try to short and price go against you 156 point, or if you can try to take a long and find and you make a nice move. But these are exceptions. It's not something that is going to happen every single day. And you can go back test yourself, go to New York time, look into these time windows, and you most likely to see between these two time windows at least two 400 points every single day using these two time windows, 940 to 10 and 1030 to 40. If you combine it to at least this number of points. Of course, it's very difficult to catch all the movement to the way down and all the movement to the upside. But if let's say if you catch part of this move, if you can take off 80 points from this move, that's more than enough. If you can take 80 points off this 400 every single day, or let's say 3 times a week, that's more than enough. For the execution, you can see in the previous video as well, but I can talk here real quick. So I told you that the confirmation of the move is when we close above 1 deviation, right? So let's say we are looking for this, but let's say this first move here. So this first moving on the upside, we have the swing high after the New York opening, the 930 is inside the window from 9:40 to 10 a.m. We have a swing high. We need to see a candle close below 1 deviation. After the candle close below 1 deviation, we need to wait some kind of a retrace, at least to the 50%, and take the trade. So today's, what will be the execution? I have this one. Here, we didn't close to 50%. I have the confirmation on this candle. Retracement to at least 50% will be this one. So short entry should be here. Stop above the high. Target should be 50% of 4, and I have deviation. That's 2.58 to 1 risk reward. That's your safe entry. Or after you understand this model, you can take the risk entry when we see that we failed, I mean, in this case, I failed to take the previous high, and there's a 2.5 reversal. I'll take a risk entry around here, stop above the high, and the same target, at least to 4.5 deviation here, and there's a 8.23 to 1. But if we know that that was the swing, the standard deviation chart, because the price didn't take this high, if you take the risk entry here, you should trade to 4 deviation, 50% of 4 deviation down here. And that's at 12.45 to 1. Or if you wait for some kind of a retrace here, your entry should be here, stop above the high, 3.85 to 1 risk reward. And I take partials on -1, 1.5, 2.33, and the less on the 4. So in this case, it should be one deviation around here, 1.5, 2.33, and 50% of 4 and 4.5 deviation will be the partial and the final target. Which one? Tell me the time of the candle. You talk about this one. You mean? This one. The correct thing should be when you have this measure from low to next opposite color candle high. I like to have 2 deviation on my chart. Let me take off this one to be a little bit clear. So I like to have my safe measure, so I measure just the single candle, like I did here. That's the safe, and the correct one would be low, next opposite color candle high should be this level, because this low, the next opposite color candle is here, but this candle makes the low, so it should be this deviation. So I like to pay attention to the single measure initially, and that would give the 4 and 4.5 days. So if I was to take a trade, forget about this one, right? If I'll take a trade here, I'll set my targets to looking for these deviations in the safe measure. But because that's not the correct one, I have a runner to levels on the downside. But I'll take like profits, let's say on -1, 1.5, 2.33, and maybe I have 1 on 4 and 1 runner to see how far price can go. And in this case, we never close below I mean, this is not the correct measure, because that was not the proper swing high. Was this one, but imagine that was the swing high, and I will trade in my stop after price failed to close below the 2. I'll trade in my stop, and maybe I'll be stopped out around here. Yes. Every time, not a failure. Even if the price closes above or below, every swing, every range, what I call range. Let me take off all this. Oh, damn. So, how I use the Fibonacci retracement. So every time I have a range, so what's a range? A low to a high. That's a range, right? So what's the rule here? I have a low and a high, and I see if the price, in this case, it makes a higher high. If on the retracement we touch the 50%, I will update the low to the candles that makes the 50%. So now let me make a different example to see clear. So like here, low to the high, from low to the high, retracement, touch at least 50%, yes. When price breaks the previous high, I move my low to the start of the move and update my range. So now my new range will be this one, and later this one. So low to the high, retrace to 50%, we break in the previous high, so now I update my low to the high, like this, right? But when price didn't retrace to at least 50%, like in this case, when price keep moving away, I would just move in my high. I left my low when was the start of the move, because we need to touch the 50% before and break the previous high, or doing the opposite way to the downside to move in the low. So in this case, I'll do here, here, all the retrace, we didn't touch the 50%, here, here. So this one, retrace, touch the 50%, breaks the high. So now I'm moving from my low to here and keep measure on the upside. So in this case, no retracement to 50%, no retracement. And in this case, we know that price is going to take this low, because when we have a retracement and price close below 886, that's my last retracement level. When price close below 886, is going to take the previous low. In this case was this one, and then price did this move here. If you measure the full range, low to the high, price close below the 86, so probably we're not trading higher, we're going to trade lower and take this low in the next hour or something, because the retracement, we can see the wicks trading below the 886, but the bodies has to be above the 886. If close below like this one, that was just a manipulation to keep moving lower. And of course, we always, beside the fib retracement, we always keep attention to the structure. That's the raw price action. All right. So here we start a bullish structure. Why? We have a low and we have a high. On the bullish structure, we want to see price making higher highs and fail to take the lower lows. Right? We break the high here, and so now we have a new low. Price make a retracement, didn't take the low, another move, taking the high. So it's a bullish structure. So right now, looks like we're gonna change this structure to the bearish one again, because we have a high that wasn't taken, and we have a low. Okay, this wasn't taken yet, so we are in this consolidation. When we fail to take a high and a low, we most likely to have a consolidation, and we need to see if the price is taking this high, keeps the bullish structure, because we fail to take the low and we're gonna take the high. If we fail to take the high, moving lower and taking this low, is a bearish structure. And we can see, for example, on this movie here, right? When start the moving up here, I have a, for now was a bullish structure. We make a high, we make a high, this candle fails to take the high, and we have a most recent low. That's the most recent low. So this candle failed to take the high and low in the set, so consolidation. The very next candle failed to take the high, this one, this bigger one, failed to take the high and break the low, right? Start a bearish structure. So now we have a new low. That was our okay, initially we could see like this. We have a low. This candle failed to take the low, failed to take the high, but this one breaks the low, right? Still bearish on the moving to the upside, never take this high. And that was this candles here, and on this candle we break this low and we're breaking this low. So bearish structure. Sorry. And we keep it doing this on every small low and high. So we're taking low, low, no retracement here. Okay, retrace. What was the high? Here. Where was the low? Here. What price did? Retracement, never take this high on this move, break the low, still bearish structure. And we keep it doing this all the time until we start seeing the price doing the opposite. Right now, breaking the high, fail to take the low, looks like bullish. So now I have a new high. A new high, and I have a low like here. And we need to wait. If we fail to take this low and break this high, still bullish. If we start taking this low and now retrace it, fail to take the previous high, we change the structure. Yeah, because because OTE is a mathematical level, is the 618 retracement. So usually the 2.33, I mean, this is just math, right? If my deviation is this, 4 and 4.5 should be my full move. So if I do this, my OTE on the upside down should be between 1, but if I use the reverse level, OTE on the 2.33 is mathematical levels, just this. That's the reason the OTE usually be on the 2.33 and 2.5. No, I mean, I don't have a script to do this because it's very difficult to measure the credit swing high or low. What I do, I have a template here, and you guys can like screenshot. That's the settings of my standard deviation levels that I use, the colors and the settings to have this measure. And I have the other one is for the Fibonacci retracement. I have this. That's the settings. And I also have like the both levels on upside down. That will be this one. So this is basically the same levels on the upside down. So for example, this is good when you have a consolidation. Let me use the settings for you guys. Because when you have a consolidation, that will be fine if I use the fractal consolidation. Hold on. All right. So what is a consolidation? Consolidation is where price gets stuck in a range. We're not moving to the upside or the downside. So this, to talk about the consolidation, we need to talk before to a concept that ICT teaches and many smart money concept trade. We need to know about premium and discount. So what's premium and discount? So 50% below is discount, 50% above is premium. But the upper quadrant is deep premium, and on lower quadrant is deep discount. So you think about numbers: 50%, 75%, 100, 25%, 0. So on supply demand, we want to buy when price is very cheap, so in a deep discount, and we want to sell when price is very expensive on a deep premium. So looking for a consolidation range, we have to do like this. So how a consolidation works? I don't trade, and I recommend people don't trade consolidation because the price keep doing this back and forth, this choppy condition, and just make people lose a lot of money. But if you want to trade consolidation by a chance, or if you get a consolidation and you want to get out, you sell above, you sell on the deep premium, so 75% above. So looking for these levels, I just want to sell on 0.76 to the 1. That's my level. And I just buy on the same level to the downside. So from 0.76 to the low, that's my buying zone. So even in a consolidation, what happened when price touched the D premium, like here, above the 75%? The smart money sell. So money, price goes low. And what happened when it gets to the deep discount? People, the smart money makes this price moving higher. They start buying here. So price start moving higher. So every time price touch one of these zones, you can see like on this gray box on the upside, and on the gray box to the side, we touch this level and reject right away. And we touch this level, reject right away. 11% is our, let's say, fair price and margin of error. So we can use the stops on 11%. So if you buy here, your stop should be on the 11%. You'll never be stopped out. If you sell here, stop on 11%. You'll never be stopped out. Until when? Until price break this consolidation. And that happened here. So if you trade from, in this case, from 212 to 301, 40 minutes trading, if you sell on the zone and you buy on the zone, you can make like 30 points on the downside and then another 30 points to the upside. It keeps on this ups and down, because that was how price works on DP premium discount and on this consolidation. So looking for these levels, we have like a zone to buy or sell, and this happened on every single range, right? So if this is a big range, I was in deep premium above the 75%. When price touched the lower quadrant, so on this level we start buying, at least to where? At least to 50%, because every time prices will move it to break a high or a low, we need to rebalance it to premium, discount, premium. So we are in discount. Where is premium? Above the 50%. But why this was a kind of a consolidation zone? Because it was pretty close to the 50%. And when we start moving higher is where we're gonna break the high. Yes. On that example, I was just looking. I was just showing like how the levels work, and that's how the consolidation works. So I just measured the consolidation range, but it's just to show how these levels work, because even on any time frame. So let's come to like the real price right now. So okay, that's a consolidation again, right? Let me clear this one. A consolidation again. So I have a low and a high. So I have a low and high. What happened when price trade to the portion that I said? So that was the portion. Let me change this color. Or here. We touch this zone, price goes lower. We touch this low, goes higher. Touch this zone, goes lower, and keep doing this back and forth, because that's how price rebalance from the deep discount to the deep premium. So usually 0.786 to the zero and 0.76 to the zero on the upside, because if it is a range, price is going to rebalance to the both sides. Yeah, usually, I mean, any retracing should be, like I said, at least to the 50%. At least 50, and now we are about to break this high, and this consolidation that was gray in the CSV is about to become a bullish consolidation. So, okay, 230 is our window to pay attention to the trade, right? So that was the swing low, and we pay attention to this level, full delivery or low, next opposite color candle high, close above -1, 1.5 and 2 is a retrace to 0 and -1. That happened here. So now we're gonna see a move into at least 2.33 and 2.5. Closing above 2.5, we're gonna go to 4 and 4.5 here. So after our window, we waited a little bit to 230. That was a looks like that's a swing low. We measured this low next opposite color candle high. Will be this one. Close above -1 here. Confirm the move. Retracement to 0 and -1. And if you're looking for the Fib retracement low to the high, we should retrace at least to 50%. That's here. We retouch the 618. Again, another retracement to at least to 50%. And here could be two scenarios because we touch 2 and rejection right away. This could be a reversal, right? So or a reversal -2, or you're gonna trade at least to 2.33 and 2.5, close on above 2.5, go to 4 and 4.5. So looking for this Q zones saves you times and make it a little bit easier to measure the correct swing high or low in the price. So, and something that I like to always pay attention. Okay, 2 could be the reversal, right? So that's a small dealing range. I make this so low, high, retracing to 50%, breaks the high. So now that's my low, and I want to see what price is doing here. So here I have a low, high, retracement to 50%. It's still like a bullish price. The body's closed above. We most like to see price keep going higher. That's it. Also, I can see that we have a small fair value gap here. That was price never taken. This small BC here. There we go. Take the previous high, retracement. So now my dealing range is from this low to this high. And remember what I said, minimum move after it closed above 1, 2.33, 2.5. We just touched this level. And you need to see. Here should be another retracement. Usually, if close above 2.5, we go to 4 and 4.5. That's it. Thanks, brother.
Very awesome stuff. Does anyone have any other questions? I know we've been going through the chat, but one would be keeping it interactive.
Yeah.
You guys basically have, full,
sorry. He's actually what? Sorry, time. I didn't understand why. Wait, why that candle? Which candle? Can you tell me the time so I can see? What time the candle? Because you said. Oh, why was this high? Because remember I said low to the next opposite color candle high. Is this candle here? Right? Sorry, this candle. So low, white candle, next opposite color candle high is the 214 candle. So that was the low. Close above 1 deviation. Oh, sorry, I measured wrong. I was giving the example. So that was the minimum move here. This one. But look, low, high, retracement to 50%, breaks the high, my new daily range from here to here. And while price is respecting these retracement levels, is all good. Here should be a bigger retracement, usually around 1 and 1.5. And we pay attention. But that's most likely to be the moving to the upside. Okay, got it. So yeah, so that's the reason I have the both measures. So was a doji, I measured the doji, and I have the full delivery. Hold on, sorry. I have the full delivery on this price leg here on the 216 candle. So this move was perfectly done here. So the right thing to do is or measure low next opposite color candle, or we could do a 3-minute swing. The 3-minute swing will be my next opposite color candle, because usually when the 1 minute has the low next opposite color candle, will be the 3-minute swing. So the 3-minute, look, the candle 209 to the next opposite color candle high give me like half point difference. So this is very accurate, because the correct thing will be here. Okay, that was a swing high. because the delivery is done here 4.5. Sorry, the delivery was here, this candle 4.5. So I measured this, the 222 candle. Half to 1 is a manipulation, right? To keep moving higher. So a new swing low here. I measure this candle here, and also because it's not a doji candle, I measure from low, next opposite color candle, high. That will be this one. But when we are inside the move that, for example, the 3-minute swing had these deviations here, I don't like to measure low, next opposite color candle, high in the swing that happens in the middle of the move. I just like to measure the single candle, and I want to see this recent swing inside the move. 14.5 deviation must be aligned. So 14.5 deviation here has the same 14.5 deviation here. So you most like to see pricing doing this move. And remember I said when it got to 2.33, we should retrace them to where? That will be 1 and 1.5. Sorry, this will be 1. Look at this retrace. We touched the 1, the wick trade lower, body's inside, or if it has a high resistance liquidity run, I'll pay attention to 0 and -1. That's the reason. And that's the most recent swing low of the big move. The Fibonacci retracement level should be, let me take this one for 0.705, 0.0786 retracement of this low here.
So I got a question for you, Rafael.
Yeah.
When your dealing range shifts, because I think that was like one thing that's pretty important too. When your dealing range shifts when you're using that fib, does that help you out when you're looking for like trail stop logic as well?
Yeah.
Like when you're like a price, because like you saw that like basically once we reached like that last turning point, the range became much smaller on like the fib tool, and it was basically, let's call it like 1 or 2 candles, and then price basically broke that dealing range low. So at that point, doesn't that already like kind of tell you that we're going to be
what happened?
A larger retracement?
Yeah, what happened is I like to have, like, for example, when I measure the move, I always have to I need to have in my chart two dealing range. The full range dealing range, so it'll be the low to the high. That's the full range dealing range. And the one that I was measuring, like I was showing the example, as soon as we retrace to 50%. Yeah. So I have the updated dealing range, because sometimes price will do a bigger dealing range. So when we do a bigger dealing range, we need to start looking the same thing to the downside. In this case, it'll be we don't have the retracement to the 50%, but eventually, because price does a lot of ups and downs, we're gonna make a bigger retracement, and this bigger retrace should respect my full dealing range. In this case, from the low to the high. So if the price retrace up to one of these levels, it's completely fine, because that was the correct low, right? And in this case, knowing that we should retrace around 0 and -1, I'll pay attention to this one, or even, yeah, I'll be probably this one, because that was the start of the big move, and I'll pay attention initially to the 886. We should fail to close below this level. If close below this level, we most likely to trade lower, and I'll pay attention to 0.705, 0.786 here. But something that is very important in this case in particular, we have a big fractal consolidation, right? You guys can see here is a big fractal consolidation in blue. So my dealing range should be from the fractal consolidation low to the high, the updated dealing range, and the full dealing range on the chart. So on the fractal consolidation low to the high, we just retracement to 0.786 and fail to close below. But even if I use the other measure that's not the most correct, but because of the consolidation here, that should be from this low, price never closed below the 886. But fractal consolidation, low to the high, is the updated dealing range. This one I can take off. And the full dealing range here, I need to pay attention to one of these levels. And right now, what's very important is the reaction side is 0 and -1. See, let me put the reaction side is 0 and -1. So right now, I like to pay attention to, okay, that was the most recent low. I want to see this level of a retracement, and I'll pay attention when price is going to close above 50% of the most recent dealing range. That's the level here. So right now, low, high, retracement to 0.705, price above 50%, so looks like now we're going to move in higher again. That's a bullish retrace because of low, high, bodies never close below 50%. And if I go to the 15-second chart, we can see the same, just bullish candles, small bearish one, and even the body is above the 50%, even on the 15-second. And above 50% of the 0 and -1, the dotted line here, price is above 50%. Something that we need to pay attention to about the time is to look, we never close below 50% of the 0 and -1 and not 50% of the dealing range. Look at this dashed line here. Back to a minute. Something that we need to pay attention. Usually the first 10 to 15 minutes of the hour will be the manipulation of the hour. So the 3 p.m. opening, manipulation lower. So we should be on this manipulation, small consolidation up to 310 and start moving after the 310, start moving more aggressively to the upside. And now break the previous high, bullish structure, fail to take the low, break the previous high. Now we're gonna move in, and that's important. What? Closing above this level. That's it, like a clock. 0, 1. Bodies above 50%. Like here, that's the 50%, half deviation, and the dotted line. And now we need to see price close above the 1 deviation and the half to confirm the move.
It was very, very, very interesting. And, you know, to see the specific movements side by side, you know, when you're saying, okay, I don't want to see a close here, I want to see the protocol. It's just very conditional if statement. So again, you guys are just seeing a lot of experience here. It's something that you want to be able to investigate with. You know, don't try this at home, you know, immediately. You know, you need to be able to see sample sizes of data and how price basically reacts to specific fib measurements and then swings.
Yeah.
And you'll see that, you know, price is just, again, rotating from premium to discount, premium to discount. And when you have specific frameworks at specific key times, will definitely make this easier. Reading it off of live price at specifically even the end of the day is challenging. So just be aware of that.
So you guys have some question about this kind of a measure, the levels. If not, I'll start talking about the next stuff that I bring today, and that will be a little bit easier because the mechanical stuff is just a range. Yeah, now that we just closed above half deviation, remember here we are in premium. Get back to deep discount. Look, the 75% should be around here. We touched the deep discount. So now we need to, even if we're gonna trade lower, we should touch the 50%, fail, and moving lower. So, but since we are start closing, we most likely see price retrace it to 618. 618 should work as a support, and from 618 we should start trading higher. Look. And how can I know this? That we're gonna touch this level and work as a support? Because that's a small retracement the price needs to do On a hidden range is something that I taught on my mentorship. There's a hidden range in the price every time, and that was the move. We're gonna touch the 886. We're gonna go first level above the 50%. That should be a 618 here. If I do something like this, OTE. Sorry, yeah. We should trade or the 618 above the 50%, or at least to 50% of this range. I can show you this. So from 618 to half, at least to the 50%. Oh, hold up. There we go. Where price start here? This one. 50%. And then make a retracement to the 618. If we close below this level, we're gonna touch the retracement levels again, 0705 and 0786, and let it trade higher. But when it's very bullish, we touch this level and move away. But here we could anticipate even a lower price because we touched 618, failed to close above the half. So when it failed to close above the half, we tested the one time the 886. So now we should test something from 0705, 0786, and we just touch the 0786 here. And something that we can pay attention, the same is low, high. Too many lines, so 618. We took the previous low, but we're still holding on the 0, so we do the same measure again. Oh, because the retracement, I don't like when we just retrace into the 618. Sometimes when it's very bushy, it happens, but for me, would it be nice if price retrace it to this level before moving higher. 0705 and 0786, and then start moving higher from here. And something that we can pay attention to see how far this moving can go to the downside. That's the high. I want to see if we keep moving higher, a reverse on the 2 or 2.5. That's the reversal zone here or here. And remember I said from 3 to 310 to 315 usually be or the manipulation or some consolidation. That's 312. So let's see the next 3 minutes if it start moving higher, because this was the manipulation of the hour. Any questions so far in this meantime? No. For me, 1 minute is fine. I just showed the 15-second chart to show the structure, but for me, 1 minute it's enough. 1 minute, and then sometimes I use the 3-minute swing or the 15. I'm not using the second chart to try to refine the entry because this based on the mathematical level. So for example, the retracement, when we should retrace and should see something around, like I said, 0705, 0786. So I don't need to look into the second chart to see this level. I can set a limit order in something around this zone, or when price touch and rejects, I enter the market order right away. When I see price fail on the level, like something happening right now, I would enter some market order here and start moving higher. So now is a level that for me I was more confident to see if, okay, we need to start moving higher right now for two reasons. 0.705 retracement, I like to see this or this, and I want to see if price trade below the 0 and -1 box, this blue box, trade lower and fail to close below. This is very, very good. We trade below and fail, and now we should see start moving on the upside on the next minute, 10 to 15 minutes manipulation. That's 314. So the next candle should start moving higher and closing above the level.
All right, so we're basically just live tape reading right now. And again, everyone needs to understand this towards the end of the day, we're just like being able to show specific theories, you know. Please be able to be responsible and manage your risk accordingly.
Sometimes we have a move from 315 to 345. I like to say that if you have some deviation pending like we have here right now, let's say, the 350 macro is going to finish this move. So if we going to trade to 4 deviation, the 350 macro is going to make the move into here. If the price is supposed to trade to 2.5 and fail here, the 350 macro going to do this move and maybe trade to the other side. So, but that's like just for the 350 move. It's specifically for 315 to 345 is the final hour of the day, the final hour of the regular trading hours. We should expect some move, but as again, for me, it's not like an entry move. And like I said, 315 clockwise, they can start having more speed here because we are about to finish this consolidation or manipulation of the hour and start moving higher. But specifically the 315 to 345 is nothing special for me. It's just a continuation of the move that started around 2 to 2:30 p.m. So if you don't have any more questions about this one, I'm going to talk to you a range that's more mechanical, and then we can get some question over there. So, all right. So for the range, then back to these are put on the 5. So for a range, there's a specific range in the day. Let me put this out for a second. So a range from 930 to 129, right? So from this range, every day, we're going to pay attention to following basically the same rules, but for a bigger range. So what we're going to see, a manipulation should be around, and this is something that we can pay attention here. I didn't get, but we should pay attention to this. After the range form, we pay attention moving to one of the manipulation that will be half or 1 deviation on the upside or the downside, or if you we back to the range, we pay attention to the retrace of the range. In this case was the 0.786, and then prices start moving higher. Here the same rule, close above 1, we're going to go to 2 and 2.5. So today range form, retracement to 0.786, moving higher, close above 1, touch 2. Touch on 2 and fail 1 time, retracement back to the gray box below, half and 1, never close below this level, again 2, fail, so moving to the downside on the manipulation, half and 1, fail to close below, and then price moving back here. So today was a big range because of the news, but let me see, for example, what happened yesterday. Range, manipulation half, move it to the other side, close above -1, close to 2.5, go to the next gray box, we touch the next, and that was the reverse of the day, and price started moving lower. So mechanical, not we don't need to think much here. We just trade zone to zone. Of course, I like to see the zone, the touch and rejection. So here I like to go to the 1 minute time frame and do the same thing that we just talking to right now to see the move. But basically I want to see price go zone to zone every single day. Let me see just one more day here. Today was even more than the delivery, the range, manipulation. That was the non-fine payroll. That was a little bit more aggressive move. The Friday non-fine payroll range. Initially we traded to 2.5. Bodies failed to close. Failed to close above 2.5. So just the week trade to the third level, moving lower. Manipulation on the downside. Close above the 30-year box. Go to fourth. Price close above the fourth retracement, go to the last one, 44.5. I didn't put the level here, but this should be 7. Let me just double check. That should be 7 deviation. No. Or 6.5, probably 6.5 because on this range, yeah. Between 6 and 6.5, so 6 here, because it's the last level, the next level above 4 and 4.5. There we go. That's it. But very rare because it is a non-fine payroll. But usually we're gonna see these deviations here. Yes, Josh. No time. I don't use the change state of delivery to confirm. Sometimes where I pay attention on a swing low, and that should be on the 1 minute, I'll pay attention if the price make any. That's the 1 minute. I like to pay attention to one thing that's very important: a fair value gap on the moving on the upside, and an inverted fair value gap on the moving to the downside. So here we have a fair value gap that becomes inverted here. Sometimes we're gonna make a retracement to this level and moving higher. This I'll pay attention to, fair value gaps. But the change state of delivery specifically, I'm now waiting for the candle close, for example, above this high to confirm the move, because the way I'm looking for the price, for me, the confirmation that confirming move to the upside or the downside is when we close above, when you close above 1 deviation. So in this case, for me, the only confirmation would be here. People that trade change state of delivery would think about trade above on this level and close above the previous high. This one or this one depends how you see the move. But for me, it's just a valid move. In this case, to the upside after the 10-14 candle that we close above -1. And even, for example, like today, this price action that we were talking about here, if you think about the change state of delivery, so probably should be or this candle here, or this candle here, right? That would be the change state of delivery. But for me, the confirmation for the move in this case already happened here because I measured the single candle. So for me, the confirmation was on this level. So in this case was before the change state of delivery. This range was calculated based on the primary number, so it's a very important range for the day. The reason is 129 is not 130 because 29 is a prime. So even like, I mean, I'm not going depth to this thing because that's gonna take a while to explain. But usually the value swing high or low, it has to be on a should be a prime number. Hold on a second. So for example, this we know after the price moving to the downside, that was a value high, right? That was 56. 56 is not a prime number, but it was on the minute, and the hour was 11. So 56 plus 11, that's 67. So 67 is a prime number, so that's a value swing high. That's just one example. So all the ranges or the swing high or lows or all the levels are based on the prime numbers. So I'm not going that, but a range always has to be 3, 9, 27, 81, 2, 43, 7, 29, 21, 87, 6561, and that's enough. So I'll just go show this real quick. So that's a calculation for hidden range. So this is a 729 point range, and that's the middle point from 243 and 729, so 486 point range. So since we retrace to 886, the last level before the low, we fail, we're gonna move it to at least 50% of the range. That's here. That was your New York session move from here to here, 212 points, based on the hidden range above here. But that's a conversation for another time. There's a ability. So 486, 729, 2187 points, and the bigger one should be 6561. So if I go to the higher time frame on the daily, right, and here I use the replay. So the bigger range on the downside, every time price is breaking in a range, we're gonna move it to 50%, first level above or below. First level above, that's here. So right now, prices start moving higher. We have a new range, break a low. We're gonna trade at least to 50%, first level above or below. So initially was first level below the 50%, 618, then the 50%. Now that we break, we pay attention to the 618 up here. Retracement level 0705. Remember I told you why the 618 should work as a support, because first resistance, then support, and now we are about to take this range high. We trade to where? Fail on the 97, the last level below the low, before the range high. We pay attention to the retracement levels, right? We should move it to 2.33 and 2.5. So I measured this swing high. Reversal should be between 2 or 2.5. So we can see price closing below 2.5. We didn't close below 2.5. And the retracement levels should be from 0705, 0786. That's here. So right now we have a price trading below this level, but the wicks is above. And if the price take it close below 0886, we're gonna take the previous low. That's the last retracement level, 886. So we can see sometimes price trading lower, but we cannot see a body close below the 886. If we close below the 886, we're gonna take the previous low. Now we touch and fail. Take off this one. Because on a high resistance liquidity run, we're gonna retrace to this level, and sometimes it'll be the 0705 that I have here. So 0705. There you go. This one. And now from here we should trading higher. If not, prices is gonna take the previous low. Yes, Abdul, it's recorded. I'm gonna provide the recording today later, or maximum tomorrow morning. Yeah. So right now, look, we trade to 886, weak trade below, bodies didn't trade, didn't close below the 886. Very rare times we're gonna see this high resistance liquidity run, and we're gonna trade to this level and the 886. But if the price closed below this level, we did something. I probably did something wrong on this measure, because the correct thing should be this one. Oh, it's all right. Any questions so far?
Looks like we're all good. What range? Time, can you be more specific? You can back test it on the liquidity depth.
Oh, 9:30. Okay. Is this one? This one. I like to use 5 or 15 for the range. That's fine. Yeah, I have like different range that that I use. So like this one, I have 6 to 9, 6 p.m. to 2 a.m. I have 2 to 5, 9:30 to 4:15. This one that 9:30 to 1:29. I have 8 to 8:50. I have 9 to 9:15, 9 to 10 p.m., 2 to 2:15, 3 to 4, 12 to 12:30, 6:45 to 10:03, 8 p.m. to 11:03. No, the time window for high and low of the day, Asia 9 to 10 p.m. usually. Like I have here today. I don't have here on this chart, but 9 to 10 p.m. Like today, for example, we started a nice move 8:30 because we have the CPI news. But me myself personally, I used to just trade the New York session after the New York opening, usually after 9:42. Like I said, we have like 5 chances in a day. I guess I raised, yeah, I raised, but the timing for the 5 chances, like the first 5 chances from one of the chances for me is a trade from 9:40 to 10 a.m. usually the first chance in the day, and that happened today, like here, New York opening. Let's see. New York opening was here 9:30. Yeah, 9:30. So the manipulation of the day, that was 9:42. So inside the window 9:40 to 10, that was a chance. But before, I don't take trades. Today I trade, like I said, for exception, because I had the Asia swing high, Asia swing low, sorry, and I have the deviations up here. So I trade this move because I have the swing low in Asia. But usually I don't take trades here. The trade from 9:40 to 10, or the New York reversal, that will be from 10:30 to 10:50. It will be this movie here. After this PM session, very rare to trade you, just if I don't get nothing on the AM session. So this is my two time windows. In very rare occasions, London after the 30-45 minutes of the session. So usually around 3:30 to 3:40. So yeah, price took the low. So that was a 2 reversal, 2.33 reversal. Like I said, this reversal zone. And by measure from high to the low, minimum 44.5 deviation, that's the moving to the downside. Right here.
We're going to be wrapping up the stream here, folks. If you guys have any other questions, you could always tag Raphael in the general chat. Definitely check out his analyst channel. He does his weekly bias post there, as well as gives additional insights on the higher time frame and how he uses these deviations. And I think that that's going to be beneficial for other people to look at if you guys are, let's call it new, or still looking at what his model is. So if you guys have any other questions, you know where to find them. And I want to appreciate, Raphael for being here. So if you guys are still with us, please drop him some love in the general chat. And we'd love to see him back with us on future live streams. So let us know.
Thank guys, I appreciate the time. So any question you guys have, you can, like George said, tag me on the general chat. I'm very happy to answer that. And I hope you guys enjoying. If you guys never saw, for the guys that never saw this, never seen this before, go back test, rewatch the video. There's a nice framework to try to predict what price is most likely to go in the next price legs. Thank you, peeps. Thanks, Rios. Thanks, Tony. Thank time. As Sonic, Josh, appreciate the time, guys. Thanks, Baila.
Much love, everyone. Bye-bye.
So, thanks, guys. See you guys. Bye-bye.